Pairs trading involves taking a long and short position simultaneously in two related shares in the same industry. The objective of this strategy is to exploit a perceived future convergence or divergence in the underlying share price. You don't need each position to make a profit, only for the profit on one to exceed a potential loss on the other. This strategy is market neutral, meaning the direction of the overall market shouldn't affect its profit or loss. Most traders tend to use a pair trading strategy when there's uncertainty as to the direction of the market. That's because this strategy eliminates market risk. For example, Royal Dutch Petroleum and Shell Transport and Trading are two halves of the same company. Royal Dutch trades on the Amsterdam Stock Exchange, while Shell trades in London. In theory, their share prices should go up and down in unison. If a gap develops between the two, it's likely it'll correct itself sooner or later. In this case, you should sell a Shell CFD and buy a Royal Dutch CFD. As long as the gap between them narrowed, you would make more money from your long Royal Dutch position than you lost from your short Shell position. In fact, this possible arbitrage is not as simple as it sounds. Disparities between the two stocks have been shown to persist for years, making this an unsuitable pair for trading CFDs, but it does illustrate the principle. Another example would be the discount that Schroders non-voting shares trade at, compared with the normal share. For the past few years, the discount has tended to oscillate between 4 and 12%. CFD traders who speculate on a narrowing discount once it reaches 12% or a widening discount once it reaches 4% would have made money. One classic pairs trade used to involve the software stocks Microsoft and SAP. A fall in the dollar would hit earnings at Microsoft, and a rise in the euro would benefit earnings at German-owned SAP. Pairs trading depends upon individual investors' ability to spot market anomalies, which may persist for years or evaporate overnight. As such, they are hardly ever as free from risk as they first appear.